What is going on YouTube? It's Sanky. We are back with another one. Now in this drop I'm coming at you guys with a couple of plays to pick up next week in the markets. But before I get this show on the road, you guys know the drill. Run the likes for me, and if you're new, join the movement by hitting that subscribe. So the weekend has arrived, but you guys know I never take my eye off the ball when it comes to these markets. I'm always looking for those opportunities to put the whole family on what I consider to be the best players that are out there, because I'm on a mission to help you guys make money in these markets. Now, I know we just come from a very testing week in the market for the growth plays, but as we head into the next week, I want you guys armed and ready, come rain or shine in these markets, to ensure that we continue to hit success. Now that being said, I've got a couple of plays I'm going to put on your radar to pick up next week in the markets, give you guys that additional depth and quality that you guys need in your portfolios to get you guys back on that path to victory. So in this one, I've got a jam-packed one for you, so do make sure you stick this one all the way through with me. You guys know what time it is. Let's get ready for the first one. So we're kicking things off right with this one. That's Grow Generation, ticker symbol GRWG, coming in at $43. Now in the week's performance, this one's come in flat. Last week when I spoke to you guys about this play, they're trading $43. This week coming at 43. Now that flat performance on the day, you guys got to realize that's a sign of strength in these volatile testing times for these plays. You guys got to realize the market isn't letting any of these growth plays break out right now. Now, you guys must know that these growth plays are far from their final form, especially if we're talking about a grow generation that's in hyper growth mode, open up these retail outlets every single week. Now, next week, this play is coming out with their earnings on the 12th of May. So I'm going to give you guys a heads up on how we're going to navigate earnings season with this play. Now, if we just look at the charts, you can see this one's been consolidating over the last 3 months, but they're right near support at $41, $42. So what I'm looking to do is grab a position pre-earnings in this one. We know earnings day brings us heat, brings us volatility. These plays are often slammed on the chopping block come earnings day. But regardless, rain or shine on earnings day, I'm looking to increase my position after earnings as well. So I'm jumping in pre, jumping in post. That helps me smooth out the earnings bias, because some plays do break out on earnings day. If you take a Lovesac, for example, or a hire car, a Roku did well, BCRX as well. So there's a potential this play can move come earnings day. So that's the move with this one. Now, what I'm expecting come earnings day with this one is I'm expecting revenues to come in strong, past that with flying colors. And when it comes to their earnings per share, it wouldn't surprise me if they miss estimates. Now we know this one is in hyper growth mode, just like a DraftKings is, so they're spending money, so they might have a miss on their earnings, but that's just a temporary move. Their next couple of quarters, I expect them to reduce that cost. Now I'm gonna give you guys something to think about to help you understand earnings day better. Now when you move into a new house, what's important is the exterior and the interior. So all the furniture, all the bells and whistles that come with. Now when a company reports those financials, we as investors, we're looking out for those revenues. You can think about that as the exterior of the house, and their earnings. Think about that as the interior. Now I'm gonna ask you guys, what's the most important? It's the exterior. So as investors, we should be very focused on those revenues. So when you see the DraftKings, for example, posting up revenues that are flying year on year, but they might be missing their earnings, you can give leeway to that. Same way as when you move into a new place, you can go and purchase all that furniture, all the bells and whistles that you need for the inside of the place. Same way a company can improve their operations, reduce their costs, and deliver better earnings in future quarters. So I want to give you guys something to think about. Now this remains one of my high conviction plays. As you can see, I've got 110 in the clip on this one. I'm looking to add around 40 shares to this one, build my positions in these plays, and that's exactly what you guys should do. You should be constantly investing into these markets, increasing your portfolios over time. That's how you guys build the wealth in the markets. Now, this is a play that we are aiming to double our money by this time next year. Let's move to the next one. So next one I've got for that's Tesla. Now, it's been a while since we've spoken about this play, but they've just recently dipped into the buy zone. So I'm going to bring this one to your attention ahead of next week in these markets. This is a player that's recently had their earnings, which is good, because what it does, it just takes away one additional piece of volatility in this one, and it just wipes out those sellers, flushes them out, and just gets us back on track, en route to that $1,000 mark for this play. Now if we check out the charts, this one's forming consolidation right now around where they're at, around that 675 region. So I'm expecting this play to hover around that. Might dip to 650, might rise to 700. So over the next couple of trading sessions, you guys can make timely entry on this play. Now this one's going to benefit from the EV renewable energy theme that we're going to see growing over the next couple of years. As I say, there are going to be some key winners from this movement, and Tesla is going to be one of these. So the way to win with this play is to go long, get your investment and hold over time. There's going to be noise, there's going to be volatility, but those who are able to hold, weather the storm in this one, they're going to be rewarded very well in this play. As you can see, stands one of my high conviction plays. Got myself 10 shares in this one, and I'm expecting to hold long and just increase and grow with this one going forward, just like the plan is to do with Grow Generation. So I'm going to bring this one to your attention ahead of next week in these markets. Let's jump to the next one. So the next one I've got for that's Walt Disney, ticker symbol DIS, coming in at $184. This is going to be one of these great reopening plays as we move forward. We know the business was impacted by closures, delays to their theme parks, movie studios, cruise lines, all their operations, but they will come back in effect and full effect at that. So I'm going to bring this one to attention ahead of next week in the markets. Now, if we look at the charts, you can see this one's been consolidating over the last couple of months. That's a good indication to get our position in this one before the next catalyst comes along and pushes this one up a gear. Similar to an EasyJet, we saw that one consolidating. I was putting that one on your radar. They broke through just this gone Friday. So I want to get you guys into this one before this play breaks through. Now you guys will do well to get this one below where they're currently trading, 184. If you get them at 182, 181, you've done well. Now I'm looking to build my position around this mark. I'm dealing with 21 shares right now. I'm looking to get this up to 50 shares. So as I say, if I make entry around 184 or below, that's a good price point for me to continue building my position in this one. Now with Disney, they got the brand and the infrastructure. So in that full reopening mode, this play is going to have no problem breaking out. Now I'll tell you guys this, there's no better feeling as an investor than thinking ahead, getting your position in the play when the rest of the market is caught up doing other things. One day you check your trading account, boom, you're in the money. Now I'll let you guys know, in this investing game, there's certain plays that are there to make money, like a marathon for example, and certain plays that are there to build and preserve wealth, and Disney is one of those plays. So next one I've got for that's Lovesac, ticker symbol LOVE, coming in at $72. You can see I'm working with 35 shares in this one. Been holding this one since the beginning of the year and they've served me well. All I like to do was just hold through the volatility in the early months of the year. Now they've released their financials just the other week, coming strong, passed it with flying colors. This play made a breakthrough, but now they're caught up in that volatility we're seeing with the growth plays. So it was only the other day, this play was touching almost $80. They've come right back down this week to around 68 before making a bounce back to 72. So there's an opportunity for you guys over the next couple of trading sessions. If this one continues to see that volatility that we're seeing amongst growth plays, you guys can get into this one. Entry price on this one is below $70. Now, I'm expecting this one to continue to perform well over the next couple of quarters, finish up the year around that $85 to $90 mark. So it's good upside if you can get this play on the cheap over the next couple of trading sessions. So to bring this one to your attention also. Now, I know this is an off-radar play, but it's these off-radar plays that I say are much less subject to this market manipulation over hype. That means you can get in that good entry, know that's a good entry price on it, and then ride that one up. So if you're rocking with the channel, you know what time it is. Now Hugh says, great video, thank you. Nice to see an example of that emotional detachment with DS, that's Drive Shack. If a play doesn't perform, it's gone. So first up, I want to say a big shout out to you, Hugh. I see you down in the comment section every video showing your love, and that's what it's all about. This was a great one to pick up down in the comment section to highlight for you guys, go into a little bit more detail. Now what you guys must know is you are the CEOs of your portfolios. I'm here to give you guys guidance on the daily, but ultimately you are in charge. And when you put that money into a play, the play's duty is to generate you returns. Take that $100 to $200, take the $500 to $1,000. Now the same way you have a company, they have a firing policy, guys. If the employee isn't working up to scratch, hitting their numbers, hitting the metrics, what happens? They are fired from the company. So all the plays in the portfolio with me, guys, I'm always ensuring they are hitting their financial numbers quarter after quarter. And if they're unable to do that without giving valid reason or explanation, guess what? They are fired from the portfolio. That allows me to only keep quality plays in the portfolio and maximizes my chance of generating the best returns. I want you guys to develop that mindset, apply those principles to your portfolios. It's going to help you guys go a long way in this game. And do remember, as always, you are the CEOs of your portfolios. So that wraps things up for this one. If you'd like to help out the channel, do hit the like button. And if you're new, join the movement by hitting that subscribe. As we progress through the weekend, you guys know I'm turning up the heat to ensure you guys are prepped and ready to crush next week in the markets with me. So I'll catch you on the next one.